Hey guys, what's going on? And welcome back to another weekly Fordcast and review. So, as the name suggests, I'm going to Fordcast what I think is going to happen next week, and I'm quickly going to review what happened last week. So, for those of you who don't know, I'm currently doing my FTMO verification stage. It was the first week of actually doing that. So, it wasn't a great start, but the thing is, it looks exactly like what happened on the first week when I started my actual FTMO challenge. So, I'm going to just show you what happened, just real briefly. For those who aren't interested of sticking around for too long, somewhere on the screen here, I'm just going to put up just a quick summary of how my trades went and all that. But after that, I'm going to go into each trade. So, I took a total of about 5 or 6 trades, I think. And pretty much I know what went wrong with each of those trades. And I'm just going to talk to you guys a bit about them because there's a lot to learn from just this week alone. So yeah, let's get straight stuck into that, and then we can review Fordcast what's going to happen next week. Okay, so on the screen here, you can see I've already plotted every trade which I have taken last week, and with a couple notes and some lines, pretty much just to explain certain things. So let's start from the beginning. I'm going to go into sort of a higher time frame so we can sort of see what was happening. So this vertical line marks the beginning of the week. Now, it's a little bit cluttered with all the descriptions and all that, but just pay attention to where this trend line is, this resistance, and pay attention to where this trend line is, the support, and also the key level, which is 0.77. Now, if you look in the range of like whereabouts I was placing my trades, they were all in this area. Now, where I like to take my trades is more so here, like around the resistance, and then also here around the support and the significant area. Now, the place where I took my trades, you can see it's right in the middle, and it's not exactly close to where I like to take my trades. So there's the first mistake. I realized that I was trading within the middle of a channel, which is not usually a good idea, because as you can see, price can make very volatile moves. So let's quickly just clear up the charts a little bit, drop into a smaller time frame. And I'll show you what I mean. Like, for example, price can be making strong lower lows, but then spike up and go right up. Price can be making, say, like lower highs or like higher lows or whatever, and just go the other way. But yeah, I'll get into each trade individually now. So the first 2 trades I took, obviously, it says here that I bought it on a lower high. Now, let's look up the previous high here. We'll just draw this small trend line, something like that. Now, what I saw here was there was a small channel. I mean, I entered very closely after price broke the channel. So what I did see was the moving average below price, or price going up above the moving average. I saw a bullish engulfing candle. So I decided to enter. Now, price did make its way up very slightly, but then it came back down into the channel. Now, the first mistake that I made was I should have closed the trade here, because usually when price breaks out of a channel and it makes its way back into the channel, it was just a fake out. So it's best just to close it. But I didn't. Instead, I re-entered and took the full loss of both trades. Now, the common theme with all these trades which I lost is like the confluences make sense, and they always do. Because sometimes you look for stuff that's not there. So the confluences, but in bad spots or bad areas. So I did have my confluences here. I had my bullish engulfing candle, which reversed off of which came off of the moving average. Also, there was the break in the trend line. This could have just been seen as, if I was to pull it back here, it could have just been seen as a bullish flag. So, price makes a strong movement up. It retraces in the form of a flag before breaking to the upside, making its way up. That is all very valid, and if I was to, chuck this like over here, that does look very valid, doesn't it? But if you come out to the higher time frames, then you would actually see that, no, price actually made a clear lower high here, which is why I wrote here, brought on a lower high. It made a lower high, then it just sunk down. It didn't actually make a lower low at the moment. It actually did make a higher low. So if I was to have waited to see that price was making a higher low, I could have, you know, started distinguishing that, hey, this might just be a triangle pattern on its way. So I should not take this trade until I see a breakout of the triangle or something like that. But yeah, pretty much what happened wrong with the first trade was I didn't look at the first two trades was I didn't look at the higher time frames, and I placed the trade in areas which I don't usually like to trade, which is inside of the channel where things can go either way. Now, just like the first two trades, the second trade here had, you know, very good confluences that I could go into briefly. But then also it was very bad timing. Just like the first two trades, this was placed in the middle of the channel. Now, don't get me wrong, you can catch good amounts of pips if you can, you know, time them correctly. But I would rather not try and catch every single move. I'd rather wait for the good moves, which I know happen around the key areas or around the significant, you know, trend lines. So yeah, good confluences, bad timing, and you'll see this is a reoccurring theme. Now here I had very bad trade management. I did not exit after seeing the higher low, the lower low and the lower high. Now what did I mean by here? If I go into the 5 minute, which I did use the 5 minute quite a lot this week because I was using it a lot the week before, and that's what helped me get that plus 13% in like within the week or whatever. But yeah, price did make its way up, and with all my trades this week, price were in floating profits, but because of bad trade management, I didn't handle things too well this week. Now, so we see a high, low, high, low, high, and then we see a lower high, and well, we see a lower low, or the lower low got created first and then the lower high. Once I saw that lower high with the 2 wicks, I should have just taken the trade out here because I know price will make its lower low, then it came up and made its lower high, and then it melted down. Now I remember holding my trade here, and I did take it out right as price reversed. So it was like right here I took it out, and then price made a huge move up. So this would have been a nice trade to buy into, but even then I would say that's not very good. I don't really like to trade that way. I don't like to catch the reverse moves. Now it would have been a clear one to catch because, you know, you can see already here there's an area where price just keeps rejecting. So support and resistance. So price rejected here, came back, did not want to break. Very strong rejections, very strong rejections. There wasn't exactly a higher low or a higher high. This I would say is a lower high from these highs. But yeah, I mean, if you caught this trade here, if I was trading on like the higher time frames, then maybe it would have been counted as a higher low. So yeah, would have been a nice higher low here, but I didn't take it. Bad trade management. Now this was probably the two most silly trades I took, which were completely unnecessary and I did not need to take them. First of all, there was a very clear rejection to the resistance up here. So price made its way up, rejected, and now it's pretty logical that price is making its way down to the bottom. But what did I do? For some reason I placed like longs here. I don't know why. I must have been trading too emotionally or too attached to the bias that price is making its way up to 0.81. So I decided to take these, and they're on a clear downtrend, even below the moving averages. You know, I was hoping to catch a reverse. I think what I was doing here was I was just drawing lines across horizontal lines and seeing that, oh, price had previously bounced off this area before, so it might bounce off here, and we are in an uptrend. But I failed to realize that, hey, price is currently ranging within this channel right now, so probably not a good idea. We don't need those anymore, so I'll get rid of these so we can just see the trades a little bit more clear. So yeah, there were all buys, there were no sells. I feel like the only place that would have been an appropriate sell would have been literally just up here, which would have been a very nice trade down to the next level. So I'll delete my previous trades because I don't really need them. So the only two trades which I feel like would have been appropriate last week would have been this short from up here and a long from down here. Because there was a inverse head and shoulders pattern. So even anywhere here with stops placed below there. How would have this played out? Yeah. So honestly, if I was to trade at my absolute best, I would have only needed to place 2 trades last week, and those 2 trades would have passed the challenge. But I took a whole bunch of trades which I did not need to take, and obviously they were just, and honestly they were not great trades on my part. Very greedy, emotional trades, and not really taking a step back and looking at the bigger picture. So with that out the way, what trades am I looking for? What am I forecasting right now? Well, looking at the bigger picture, we can see there's higher lows. So we can see a low, we can see another higher low, and then another higher low, which is following this ascending trend line. Now, price has strongly rejected the 0.77, and currently on this 2-hour candle, it has also rejected it. It has not exactly crossed or closed it, or closed below it yet, but if we do see a rejection, or like a close above, that's a trade which I would be interested in taking, and I feel like that is a very fair trade to take. With stops just below the lowest low, or the previous low, and I will set my profit to the top of the channel. Honestly, like, there would be safer. But yeah, so that's a about 4%, 1 to 4% trade. 1 to 4 risk to reward ratio. That would be a nice trade to take. Once price makes its way all the way up, then I can take a short from down here. There's a lower high, another lower high, and if price does form another lower high here, stops just above the previous high, let's bring it back down to 0.77. Now that's if I do see a strong rejection. If there is no rejection and price does break and decide to make its way up, then I am going long. But I am taking, I'm keeping full awareness in regards to, hey, price could just fake out and make its way back down. At the moment, I do see quite a lot of movement still in this channel, so usually price doesn't break out until towards the end, but anything could happen. So there's lots of little trades I can take within here, which are all very valid trades, which I would be looking forward to. Now, if price doesn't close above the 0.77, if we see something like a crack below, then chances are price could come back and touch this trend line before making its way up. Or price could actually break below, do something like that. That would be a sell I would be looking to take. But price is very bullish over the past couple of weeks, so I'm not really looking for sells. But if price presents a sell opportunity, and if it makes very clear sense, then I'm going to take it. But yeah, that's pretty much the trades I'm looking for next week. I think I'm going to pass the verification stage next week. I feel like I've got my head on straight. I've done all the analysis I've needed to do in regards to trades I shouldn't be taking, trades I should be taking. So I'm feeling very confident coming into this week. I'll quickly put my trades up so that you guys can have a quick look. So that's a potential long if price rejects and does not close below the 7.7. Potential short if price creates a lower high and there's a strong rejection to this trend line. And honestly, I'll keep repeating the longs, the shorts, the longs, the shorts, as long as price keeps ranging in between these two levels here. So if price cracks below and does not close above the 0.77, then depending on what the next lower high it makes, that's where I'm going to place my stop loss, and I'm going to be selling to the bottom of the channel, so pretty down here. But pretty much that's just a very general gist of the trades I'm thinking about taking next week. Obviously, I'm not expecting these trades to play out. Those are just the ideas, and that's what I'll do. That's how I will react if the markets play out to, the conditions I just spoke about with the lower highs and the higher lows, rejections off significant levels, etc. So that brings us to the end of the video. If you liked the video, then click the thumbs up. if you want to stay in the loop with these kind of videos, I make them every single week. Click subscribe. I'm not going to miss an upload. And there's also other little uploads here and there along the way throughout the week. So I'm going to end it here. Have a good one, and I'll catch you guys in the next one.